If you have interest in cyber insurance, then you're in the right place. I've got a guest here, someone that I've known for many years, who I think knows more about this industry than anybody. I've got some really, really hard questions I'm going to ask him. And so if you stick around, you're going to learn something about cyber insurance. It's Tom Reagan, so make sure you stick around. Hi, I'm Ed Amoroso from Tag Cyber. I want to welcome you. I've got a guest here in the studio in New York that I've been looking forward to talking to for some time. I've known him for a while. Bought my first cyber insurance policy from him. It's Tom Reagan, who's a cyber practice lead over at Marsh. I think he's one of the most capable, one of the most knowledgeable people in this area. So we're going to ask him some questions that have been on my mind that I suspect are on your mind. So I hope that you enjoy our discussion. So Tom, welcome to the studio. Nice to see you.
Thanks, Ed. Thanks for having me.
Good. Hey, real quickly, tell us a little bit about the work at Marsh, and then I've got question after question for you that I'm dying to ask. But tell us a little about your work first.
Yeah, sure. So Marsh is the world's largest cyber insurance broker. We've been in the space for about 25 years, and basically our job is to help organizations, not just with cyber insurance, but throughout the entire risk management life cycle. So we help them understand, measure, and manage their cyber risk. Obviously, most immediately that comes across in buying cyber insurance, but increasingly help organizations around claims and incident management, understanding risk intelligence, the idea of applying statistics and analytics to business decisions around cyber risk, and increasingly even into cybersecurity through our marketplace services. So we really are a comprehensive risk management service for clients of all sizes around the globe.
Now you are the real deal. You know this. You probably were doing this maybe before anyone. Right? You're right there at the beginning.
I was there early. I think that a lot of people would say that they were earlier than I was, but I've been doing this this will be now my 20th year in the space.
Yeah, I mean, there's only a few more years you tack onto that before the first policies were written.
It's a little weird to be old man cyber.
Well, I'm glad you're here. You were kind enough to come because I said, Tom, I've got questions that come up all the time, and you're the guy to ask because I think I'm going to get the straight scoop from you, and I always have. So let's start with the first one.
Sure.
There's a lot of people watching who either deal with or they work as a cybersecurity vendor. And there's this claim that gets made all the time that if you buy Acme cybersecurity endpoint management or Acme, SIM or Acme something, that of course you're going to get lower premiums on your cyber insurance because, well, if you don't smoke, then you get better life insurance or health insurance. So, talk to me about this. How real is it that if you're doing good cyber behavior, so to speak, your premiums will go down? What's the right way for people to think about it? And I don't come at this with any preconceived notion. I just want to be able to advise clients, and I think a lot of what we hear from vendors seems like it might be a little bit exaggerating. But what's your thought?
Well, as a salesman myself, I can't knock anybody for trying. I would say that, look, in general, the holy grail is to try to bring together cybersecurity and cyber insurance. And organizations want to see investments in cybersecurity reflected in their cyber insurance premiums. I think it's important to recognize that the focus of cyber insurance is a little bit more on the exotic or catastrophic events. Things are going to be high impact. And so there's definitely a correlation between cyber hygiene and the cost of your cyber insurance. However, it's unusual for it to be tied to a specific individual vendor. Different underwriters at times might have different partnerships with specific vendors. We've seen that from time to time. But in general, insurers are going to be a little bit vendor agnostic. What they're not going to be, though, is control agnostic. And I think that we look at the history of the 20 plus years I've been in this space, you see that there's a definite correlation between certain phases of risk and certain controls that underwriters like. So in the late aughts, there was a lot of focus on endpoint encryption, backup, removable media encryption, Today, there's a big focus on what we at Marsh call the critical 12, the 12 controls that are most effective at mitigating ransomware. And this isn't just based on our expert opinion. This is based on, one, the controls that the underwriters are seeking when they underwrite you, and two, the work that we do in the Marsh McLennan Cyber Risk Intelligence Center to look at the relationship between client controls and outcomes. And so we know that these critical 12, and there's within that even a critical 6, really drive the outcomes. Underwriters today are intensely focused on these controls. So I know that you asked the question about the correlation between a vendor and a reduction in premium. For these controls, it really is a correlation between having them and getting insurance. Organizations that don't have these critical controls, like advanced endpoint detection and response, PAM, MFA in particular, are going to struggle to get any coverage or meaningful coverage. So it's not as much about the carrot of getting your premiums cut in half. There's a lot of reasons why that's difficult, if not impossible. But it's very much about the stick of, if you don't have this new emerging baseline of controls, you're going to struggle to get insured at all.
Let's make sure we get that, because that's pretty foundational. I agree with you that it should be in everyone's interest, both the insurance company, enterprise, vendor, everybody, for people to be following controls. I haven't seen your 12, but I bet they're great, because most of us work off the same
Incredible. Blow your mind.
I'm sure they're good. So everybody's, the tailwind is in the same direction for everyone, but I just want to make sure I'm clear. It's typically not the case that an enterprise CISO can go buy something from a vendor and then call the insurance company and they lower the premium. That doesn't sound like something that's happening on a regular basis.
No, and it would be unusual for an insurer to name check the specific vendor.
It makes sense, right? But the broad concept of, if you're messing up, if you're not doing the basics, you're probably not even going to be able to buy insurance.
That's right.
That seems reasonable to
That's
me.
right. It's important to have the right vendors with the right capabilities.
Yeah.
And certainly for some of these controls, there are tools that are more widely accepted and recognized than others. But it's generally not a one-to-one relationship. Underwriters are looking for a set of controls across the board. They're not going to fall in love with one individual name.
Second tough question, the flood question.
Sure.
So this is the one, and we were chatting before. So in regular insurance, I'm sure the math is done that, let's say you're selling flood insurance, you're not going to have a flood in Miami, San Francisco, New York, and Detroit the same day.
Yeah.
The earth doesn't work that way. So you can safely sell flood insurance without worrying about that. But you and I both know, we're old guys doing this, that you could have a cyber flood in all of those places at the same day, and even more. So how do you do the math to make sure that if there was some really big thing, like a nation state swoops in and hits all the entire sector at once, how is it that insurance companies can still justify the math behind the underwriting and whatever reserves they've got to do? How do you do that?
Well, you definitely hit on one of the hot button questions in the cyber insurance industry right now. So I think that the insurance industry is really good at dealing with risk, but certain kinds of risk. The industry does really well with events that are regular and repeatable. They even do well with events that are really big, catastrophic events, right? Yeah. A lot of what drives the insurance industry is catastrophic events. The problem is existential events and events that are too big to exist. And so historically there are ways that underwriters deal with that. They basically don't cover those existential risks, and that makes sense, right? The risk of a meteor hitting the Earth. You don't need to buy insurance for that. We're all going to be gone anyway. Yeah. I think identifying and demonstrating where those lines is has been the challenge, and given some of the events of the past couple years, there's been a greater anxiety around that topic. So that's really the key, is to identify what is both the scope and likelihood of an existential cyber event. I do think that actually a lot of the anxiety around that has been a little bit overbaked. Mm-hmm. There have been, one of the things that we also say here, people say a lot about insurance, is there just isn't enough data around cyber insurance. Yeah. But actually, there's quite a lot of data around cyber insurance and a lot of experience. As you noted at the beginning, we've been doing this for 20 years.
Sure.
What we've seen is that events can get real bad. but then also the organizations have an ability to correct. So you mentioned natural disasters. One of the critical differences about the cyber domain versus the physical domain is the ability to respond. You're right. It's very unlikely for a hurricane to hit both coasts at the same time. But it's also impossible for you to move your physical infrastructure from one to the other in response to events. With cyber, you can do that. So you see this real vertical ramping up of events, but also you see the ability for organizations to correct. So I think that while cyber does share some similarities with natural catastrophe, it's also very different. The key is really to prove it. And that's one of the reasons why we've developed the Marsh Cyber Risk Intelligence Center. We basically brought together all of our resources throughout MMC. So that's Marsh, the retail insurance brokerage, Guy Carpenter, which is the reinsurance brokerage, reinsurance or insurance for insurance companies, and then Oliver Wyman, the global leader in strategy, to help understand these issues and carry that forward. I think that organizations are a little bit overly anxious around these potentially existential events when there's a tremendous amount of, one, activity in the public and private sector to try to manage those, anticipate those, and prevent those. And also there are lots of abilities for organizations to anticipate and respond to the truly existential. People maybe are a little bit too focused on these existential risks and not focused enough on the ones that are right in front of their face.
So there have been judgments where a company has claimed lost revenue and a big amount of money gets sort of awarded by a court. If that happens 10 different places at the same time, that seems like that could add up to a big problem. But I guess that you work that into the math.
Absolutely, and the underwriters account for that. And I think I'm glad you're pointing out that the insurance industry does have a pretty good track record of paying on these losses. The issue here is not whether or not we have one big event, or honestly, even if we have 10 big claims. It would be on the order of 1,000 claims all at once. And I think that one model that I've looked to a lot in this space is biologic, right? We're all armchair epidemiologists these days. I think that people don't recognize how much biodiversity there is in the cyber ecosystem. And so, yes, bad things can happen, and in fact, we know will happen. But I'm not a big believer in the existential cyber event. I think that organizations not only have done a lot over the past couple of years to prepare, but they have strong partnerships in the public sector, and that the fundamental biodiversity in the cyber economy means those events are very remote. They're always theoretically possible, but the actual discussion here is this a 1 in 10,000 event or 1 in a billion, not is this 1 in 2 or 1 in 3.
Tom, you're calming me down one at a time here. This is good. Let's get to budget. So, traditionally, CISO has not really had to pay for cyber insurance. So people like myself love it because they get, here's my budget, and somebody else in an insurance group is going to pay. So there's no reason not for us to say buy. But what's the trend there? Do you find CISOs eventually will have to decide, do I hire more engineers or buy cyber insurance, or do you think it'll stay somewhat separate from operational budgets?
Well, I definitely think you're right that the trend has been towards CISO support for cyber insurance.
Yeah,
that wasn't
no
always the case. There was a time when CISOs saw cyber insurance as, a failure, right? That it was a judgment that their program wasn't good enough to prevent bad things from happening. That's not the case these days. I do think that increasingly within organizations, there's this fundamental question about spending on the cyber risk issue. See, I don't think organizations have cybersecurity problems. It's not a technical issue. Security is not an absolute good. The purpose of the security of the program is to protect the organization, its ability to serve its customers, to deliver the business, to deliver results to shareholders. So organizations need to make an appropriate level of investment, and they have, particularly in the United States, over the past 20 years. The challenge, though, is how much more can we spend? And so increasingly organizations are doing this math around the allocation of resources. And so you're right. While I've definitely seen many CISOs become more supportive of the product over the past couple of years as they've understood it and how it can be an important complement to their programs, I haven't spoken to a CISO yet who hasn't raised questions about budget.
Yeah,
And so I think everyone's grappling with this allocation of resources. That's one of the reasons why cyber insurance has been so successful. It's very capital efficient, right? If you look at the cost of cyber insurance, if I can give you a $100 million insurance program for $2 million, what else could I spend $2 million on in the organization that would take $100 million in risk off the balance sheet? It's really hard to make those choices. So I think that going forward, CISOs are going to have to do that math. I think that cybersecurity really is a business problem and it's a risk management problem. And so it's going to be a series of tough choices to allocate resources to best position the organization overall. CISOs are an essential part of that conversation, but they'll have to work with other stakeholders like risk management, like treasury finance, like legal, to make those collective decisions. So I think that's absolutely the trend going forward.
It just to date in our own practice at TAG, I haven't seen a CISO have to make that operational decision like hey, I've got this much budget and I can either hire engineers for my SOC or buy SOC. I haven't seen that.
That's not the case today.
Yeah, you think that might change?
But that decision's definitely being made above them. I can
Above
tell you
them,
that
yeah,
as we
above
talk
them.
to
No, I
CFOs
agree
and
that,
finance leaders,
that's fair.
that decision around allocation of budget is very real. I think the other reason is that
that's a fair point.
There's a lack of a financial language within the cybersecurity community. See, cyber is experienced in ones and zeros, but organizations measure risks in dollars and cents. And so the lack of a financial vernacular, an objective, quantified financial vernacular in cybersecurity, we've talked about it for a while. I think we're much closer today than we were in the past. That is going to have to enter the CISO's vernacular. CISOs historically, right, probably when we both got started, were technicians with a strong technical and engineering background.
Sure.
Today they're business leaders.
Yeah.
And business leaders manage and measure risk in money. And so I think that's the other challenge, is that CISOs will have to put that financial vernacular into their organizational planning.
Such great advice.
And that's going to inevitably drive that coordination with the insurance spend.
Fantastic advice. I got one more tough question.
Sure.
You still got some energy to go?
I'm good.
We're digging into these tough ones. You and I are both seeing a lot of insurance companies becoming more actively involved in the cybersecurity, meaning
For sure.
help desks or being. It just seems like more proactive. When you and I first met, it was tell us what you're doing, and we get a big room, we tell everybody deliberates, and that's it. You never hear from the company again.
Yeah.
Doesn't seem like that's going on now. Talk to me about sort of the trends in an insurance company or in that insurance ecosystem being more actively engaged almost day to day in risk management or even in incident management when there's a problem like calling a help desk or something.
Sure.
What's the trend there?
Sure. So look, I mean, insurance companies fundamentally want to support their customers. They're not looking to get involved in your business, but they step in when they see an issue or a challenge.
They want you to be safe. That's why you like it, because everybody, the tailwind's the same. They don't want you to get hacked.
And they have a different perspective. They deal on a daily basis with events that hopefully are exceptional or once in a career for most companies. So they bring a very real perspective. I think one of the things that we've seen as a clear trend is an opportunity for organizations to be much more sophisticated around their response and recovery, if you think about a NIST CSF framework. Organizations, and we see this, we use the Marsh Cyber Self-Assessment. It's about 150 questions to gather objective technographic and firmographic data on our customers. Not only we use that to diagnose their risk, but also then represent them into the market. So we have a really good view on literally thousands of organizations around the globe and the maturity of their controls. Organizations are very much overweight on detect and protect. When you start to look at that in response and recovery, organizational maturity really does get much less sophisticated. And so I think that the need that the cyber insurers are identifying and responding to is the need for organizations to make better, smarter, more effective choices in the response phase.
You've gotten a ransomware thing, what do I do?
Absolutely.
Yeah.
Absolutely. And it's a hard thing to practice. I know that organizations prefer not to practice it, or at least some do. It's certainly a lot more interesting to
go war game.
Well, to go to RSA and go look at pew pew maps and cool space laser technology. It's a lot harder to get everybody around a conference room and really deal with unusual scenarios. Yeah. But we see a lot of variability for our clients around the quality of that response. And that's because the events really are unpredictable. It's not just that organizations don't always have a plan. Increasingly, most organizations have a plan. It's how well tested and rehearsed is that plan, and how ready are you to adapt it. One area that we see as a real challenge, even for organizations that lean heavily on their cyber insurer, is flexibility when the partners and tools that are in place aren't the right one for this particular event. Maybe your IR vendor doesn't specialize in that type of a response because they prefer nation-state actors and this is an insider threat. Maybe your law firm doesn't have the right expertise in that area, but they're on the insurer panel council. That flexibility, I think, is the need that many insurers are leaning into. It's a real opportunity for organizations. You can outsource that to the insurance company. I think that we see ourselves as positioned because we work for you, right? We're your advisor to really help organizations pull together all those threads, pull the best capabilities from all the different providers you work with or might work with, and pull those together. But the ability to rehearse and respond is a real opportunity that organizations are pretty chronically underweight in.
You see that more in mid and sort of lower end companies?
No, I see it across the board.
Across the board, huh?
Yeah, look, larger organizations have more resources, tend to have more sophisticated employees, but they also have more problems.
True.
They have a lot more complexity, and they're probably more likely to have random
Everything's
things.
kind of proportional.
Absolutely. I think that there's a real misnomer that large organizations are better prepared. One of the advantages of working with organizations in the mid-market is usually closer to the principals. That makes it a lot easier to get everybody on the same page. As you probably know, in a large organization, there's a lot of stakeholders. And when something really goes wrong, you have a high probability of dealing with stakeholders who aren't necessarily briefed on the program. It's really important to provide not only the tools, but also the space for organizations to be able to do those response and rehearse those tools. One of the things we focus on a lot for our customers is we've worked with another firm to develop basically a safe space for incident response. It's secure, it's outside your environment, but actually you control it. And it allows you to not only bring in all of your outside partners, but also rehearse these events. If I could get more organizations to do good quality practice and drills, for all the money organizations spend on the equivalent of fire extinguishers and smoke detectors, they just don't spend enough time and energy practicing getting people out of the building safely. I really wish that people would spend more time doing that.
That's so interesting. Hey, what have I not asked you that I should have asked you? There's some topics we didn't touch on. We hit on the premium, the CISO budget, help desk, flood issue. Any others that maybe we should have covered that come up in your day-to-day work?
I think these are the really big issues. I think the single greatest challenge is getting the cybersecurity community comfortable with the role of cyber insurance.
Yeah.
We still fight uphill around that.
I'm surprised. In my work, I think I same observation as you in the early days. I wasn't quite sure. Like I remember when I first met you, not really knowing what was going on. Really, like, what are we doing here? What are we buying? What are we getting? Who are all these underwriters? I think that's changed. Maybe it's because of the work you guys have done. Most
and it might just be that I deal with the tough ones, but I think that there's
you're the closer.
Yeah, I guess. I think that there needs to be a greater recognition that this is not a security issue, that this is a risk management issue.
Risk transfer, right?
Well, not just risk transfer, right? There's 4 things you can do with the risk, right? You can avoid it, you can mitigate it, you can transfer it, and you can accept it. Avoidance for most organizations is pretty much out the window.
Yeah, right.
So really you're talking about the classic balance between mitigation and transfer. I think getting CISOs the tools they need to think about these challenges as risk management challenges, the tools to measure them in terms of financial risk and to make decisions that way. I think that's not only essential, but it's the way of the future. That's the
Yeah.
message we're trying to get out.
That's outstanding. Now, if people watching, and it seems likely, found this interesting, what if they want to talk to you guys, what's the right way for them to be in touch with you and with your practice at Marsh?
Sure. So www.marsh.com. And
That's
then
an easy one.
Absolutely. We're available for not just insurance buyers, but also for CISOs, general counsels.
Yeah.
We really are a full cycle risk management organization.
Well, I think you're the best in the business. I'm glad you stopped by. I know you're also in Manhattan, so this was nice for us to get
Absolutely.
together. Let's, in 6-8 months, let's do it again. Let's do an
Be my
update
pleasure.
to see what kind of things have changed in the industry.
Terrific.
I hope you have a great 23.
You too. Thanks, Ed.
Thanks for coming by. And for everyone else watching, we'll see you next time.